You're welcome back to watching Business Morning on Sunrise Daily. Let's head to the bond space now, the financial market. A success for the federal government. They set out to get $500 million, the very first domestic dollar bond, but they got $900 million subscription. And the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, said that the result of this is a historic bond issuance, that it shows that investors have a lot of confidence in Nigeria. Now, let's discuss more about this with the Chief Dealer Treasury, Polaris Bank Limited, Mr. Bankole Dusoya. Mr. Dusoya joins us in the studio. Good morning, Mr. Dusoya.
Good morning, Amy.
I say congratulations. Yeah, we went out for $500 million and we got $900 million.
Yes, that's
yeah, so, I mean, everybody's happy about that, especially the government. But some people are thinking of the cost of this. So they now have $900 million. This is not free money. This is investment from members of the private sector, you know, individuals or institutional investors. So if we could have what this means, the costs, we could have that slide, please. So there you have it, the cost of this to the government. So while we are celebrating $900 million, it does mean the rate is 9.75, wow, yes. Yeah. And this is from Mr. Bankole. They are the ones who deal with those numbers. Yeah. So annually, the federal government will have to pay this $87.75 million to the investors.
Yes.
They have to pay this beginning from when?
It's from March.
March next year. Okay,
and
so
they pay twice
a year.
March
so
September.
They'll do March 2025 and then September 2025.
Oh, yeah.
I think that's dividing that into like two.
Yes.
So you do $43.8 million.
Yeah.
Yeah, in March and September to the investors. Good investment for me. Yeah, if I was able to raise $10,000, I think the least you could do was $10,000.
$10,000.
Okay.
So that that was the major advantage, because now we're dealing with domestic investors.
Yeah.
So this cost you're paying out is paying back to people who invested locally. Yeah. So it's not necessarily capital flight out of the country. So that's one way of seeing it. And then the other one is that, I mean, we need to look at the infrastructure gap and why they're raising these funds. I mean,
so before we get there, so this is what they'll pay annually.
Yes. For
5 years, it's a 5-year security. Oh, yes. For 5 years, they pay $87.75, you know, to the investors, divided into twice in a month and in a year. And then by the 5th year, they return back the $900.
The entire capital, yes.
Do we know how much this will cost at the end of 5 years, the federal government? So that would be 900 plus what this times 5.
5 years, that's it, roughly. That gives you about $400 million on top of that.
Okay, so $400 million.
An estimate of over $400 million. That takes us to about 1.3, 1.4 billion.
Well, about 1.3?
1.4 billion.
Billion. Yes. 1.4 billion.
Around
about 1.4 billion.
Yes.
Yeah. So that's what the government will pay for this $900 million so that means the government should be able to generate at least $1.5 billion from this in 5 years.
Oh yes, the cost-benefit analysis must have been done. Like I said, we have a lot of infrastructural gap that is yet to be met, and then we're looking. I mean, look at the situation in Borno State. The dam that has just collapsed. We have a lot of such that needs to be fixed or even expanded. And then going into the agricultural space, we're talking of insecurity on one end, of course, equipping the armed forces is one. On the other hand, it's about making sure the rail structure that we have presently is expanded into the interiors to help bring out goods and then help with silos and then processes, semi-processing of agro products so that we can improve on our non-oil exports. When the non-oil export expands, you'll see that our export proceeds in dollars is expanding. So we are not just simply hooked to the fate of the crude oil pricing. You can see that crude oil price has dropped from $80 below $70. So diversifying away from crude oil export proceeds is very important, and these are the kind of funds you need to reinvest into power sector, irrigation, agriculture, defense. So these are the cost-benefit analysis that would have been done before raising these funds.
But the thing is, we do not exactly know what or where this is going to be channeled. What we heard from the minister is that it will be channeled into strategic economic sectors based on the approval of the president. And this is where worries come in and questions come in. Shouldn't these projects that this would be channeled into for us to be able to reach at least part of that $1.5 billion in 5 years? Shouldn't those projects be outlined? I know it's not Sukuk. It's Sukuk you have, very outlined.
Specified.
Yes.
Those are tied to projects.
Yes.
Yes.
But don't you think that perhaps if that was done, so a Nigerian who has invested in this becomes not just an investor who wants to make profit, but also a contributor to the development of all this infrastructure that you're talking about? Because even up to now, we don't know what exactly they want to use it for. They just told us it to be channeled into strategic economic sectors approved by the president.
Yeah, ordinarily, if we go back to the budget of 2024 and the summary, and there were specifics when it came to critical sectors. It was defense and agriculture in particular. Of course, we had to secure the farmlands, and then, like I said, improve on infrastructure that helps to bring out and quickly the products, and then also help with processing and then storage, because we have a lot of loss of
post-harvest losses.
Post-harvest losses, which is a very big problem. So basically, diversifying away from crude oil it's been a critical sector in the mind of the government, and they've always spoken about that. So basically, it's in the budget. They're just trying to cover the gap, the deficit, the budget deficit, by raising this kind of fund, and then basically not going to the Eurobonds market, where we saw what happened. Rates were as high as double digits, number one. Number two, between the NMPC and Afrexim, the last cost of fund was about 11.75. So this is cheaper. And then going into next year, there's a likelihood that the DMO would raise this fund
because they're still going to $2 billion.
They're going to $2 billion, and with the challenge I'm seeing with Borno State dam collapsing, they may even expand that portfolio of debt stock they're trying to raise. But if the US Fed sits this month of September, there's a likelihood of rate reduction and then the multiplier effect globally. So this 9.7 could as well probably just drop to 8.75 or even lower going into next year.
Does that mean the Naira is going to depreciate further?
No, that's not dependent on that. We're talking of cost of borrowing in USD going down, and then we locally have an option rather than going to the Eurobonds market internationally. This fund was raised from domestic investors exclusively, so that's an option. We didn't used to have this option, or we never explored it. So this time around, we're seeing that it was largely oversubscribed. Number one, it showed liquidity. Number two, it showed trust that domestic investors were willing to invest in their own sovereign.
I guess is the use that we're waiting for now. I know you said, yes, obviously.
It's documented in the budget.
It's documented in the budget, but I mean.
The critical sector are defense, agriculture, education, and health.
Okay, all right. So we'll follow up in the next 5 years. Yes. You understand, to see.
On a yearly basis, budget achievement, we need to engage. So those who have concerns have genuine concerns. It's true that the concerns are there. We need to see budget achievement with vis-a-vis the amount that has been raised. That's what we need to ask, because they would spending this money on projects that have been highlighted in the budget and broken down per ministry. And
not personnel expenses.
No, hopefully not.
Okay, but I mean, I know you said it's cheaper money for the government, but it still increases our debt servicing.
Oh yes.
But we are still around the safe space.
Yeah, that's your debt. Your debt servicing versus revenue is very high, but debt to GDP is still okay by the economic definition.
Should we be worried?
We should be, that we are growing, because year to date we have spent $2.8 billion on debt servicing. Before the end of the year, that could get to $3 billion, and this is coming in March next year. So what we have to focus on is the benefit that would accrue from these borrowings. We must ensure that these funds are spent for, like you said, critical sector funding, covering the gaps and ensuring that we become productive, especially in non-oil sector, so that we're not just fully dependent on oil pricing. That we saw what happened in 2020 when crude oil price dropped to below $40 and $30 per barrel. We do not want that again. We want to be a diverse economy that produces and then earns from multiple of sources. So basically, this should be funding that gap and not necessarily depending on oil prices dropped from 100 to 68. I mean, the worry won't be there if we are very productive on the non-oil sector side of it.
Yeah, well, that's honestly what we all hope for. It's just that when you look at the reality, yesterday we had an exporter here, and he was telling us some of the realities that they face as exporters. So we keep talking about the ease of doing business, yet issues are still abound. He was talking particularly about the folks on the road who disturb them. They have to pay. He said in Lagos, if you're heading to Apapa, he pays there are about 35 spots, and they have to pay 5,000 naira to each of those. Now, this has been brought to the attention of the government. You know, if we say we want to improve our non-oil exports, these are the issues we need to handle. You mentioned security. We know what's happening to agriculture. The reality of it, farmers are not going to the farm, you know. Oil exports. Agriculture serves as raw material for huge industry in the country, and yet we are still dealing with the basic, which is food, not to mention the value chain, adding value and all of that. So these are realities, and I guess that's why the people want to know, while we celebrate the success of getting 900 million, heading to $2 billion, can we exactly know what project this is going into? Not just, you know, critical sectors. We know the problems, they've been there, they've been in the budget since the beginning, but how do we follow up and track up, you know, that this is being efficiently used?
Yeah, the concerns are rife. Imagine the exporters being able to move their goods on rail. It's going to be faster and more secured. Right now, of course, the security agencies have to bother with, you know, disturbances here and there on the roads, but if we were able to expand the rail structure to accommodate export agro products, then that would be very good. And then also we shouldn't be having tankers moving petroleum products also around the country. It's not efficient, it's expensive, and it's also very dangerous. We see the accident we saw happen in Kogi or in Niger State a few days ago. So basically, we should be expanding our capacity to transport on rail, not just human traffic, but also products, basically. So these are the kind of questions and pressure we should be putting on government, that these funds should be going to rail transport of non-oil products, basically. So the concerns are rife.
The other side is the FX issue. We've seen, I think we've had 2 interventions from the CBN this week.
Oh, yes.
Last week we had one to the BDCs.
Yes.
And then we see when they don't intervene, the Naira drops. When they do, there's a boost. So a lot of people have said, well, it's a managed floating system, yes, that we're working with. And as they say, no country truly leaves the currency, you know, to the demand and supply. But are we in a good place at this time?
We're at a better place compared to where we were a few years ago.
Few years or few months?
Few years, few months ago. Because what we're seeing now is CBN intervening when there's need, and not just coming, you know, at a calendar period. So basically, they just intervene when there's, you know, need to do that. And what is happening is that we're seeing a lot of letters of credit that were open half year come to mature. So there's a lot of demand for dollars, and then going into end of year also. Those who want to bring in wares for end of the year are also seeking for funds. This period we are currently at the period where the school fees being paid by a lot of people locally, and then
is that a factor? I was told it's not really a factor.
It's not a major factor, but it's just one of it.
But it's a factor to the retail investors.
The retail market, where the BDCs need money to sort out something. So basically, the CBN has been intervening when there's need, and then it's kept the rate stable, basically. And then we have a liquid market compared to last year, 2 years ago. We have a liquid market. The issue at hand right now is pricing. So we're moved away from illiquidity. Reduction
of the gap.
We're moved away from illiquidity to a liquid market where pricing is the issue, and then central bank would usually come in to ensure that pricing is stable, because most investors want a stable environment where you can plan that if I come into Nigeria, I buy a treasury bill for 1 year, by next year when I'm leaving, I'm not far off where I came in. So stability is key. In that instance. Then
the gap between the parallel and the official market, that has also...
It's thinned out to about 100, just 100 naira. It used to be about 100% when we were at 400 to 700. Yeah,
so we are in a
has
safe
changed.
place.
It's safer, definitely.
At least we can count some gains of the reforms.
Yes.
Of the reforms.
Yes, you can. It's tough. You can't deny that. But comparing to where we are, it's more stable environment to play in right now compared to where we are. And that's because of the CBN policies and interventions we've seen so far, to be honest.
Yeah, but we still have a lot to do, especially from the fiscal side. Thank you so much, Chief Dealer Treasury, Polaris Bank Limited, Mr. Bankole Odusanya. Thank you. Thank you for the numbers.
Thank you.
Through the calculation.
All right, thank you.
All right. So, I mean, $900 million is going to cost the government about $1.5 billion in 5 years. That's what investors will take at the end of the day, the cost of that. But as Mr. Odusanya said, we do hope that actually it's channeled to those really critical areas that will boost economic activities, and the economy can generate more than 1.5 billion in 5 years if that's well used. Now,